Deal Surgeons Elite Masterminds. This is Diamond Life, and I'm doing a Glitch in the Matrix review for US 30. This is for the week, not for the daily. So, I guess this really stuff is really for me to go back. I watch the videos all the time to learn what I did, but you can learn about dealers ranges if you want to stay here. So, after looking at the COT data, after looking at the stuff ICT teaches as far as balanced price ranges and the fair value gaps, this is going to be a very interesting video here for myself. Uh, so this is really based on ranges and fair value gaps. Okay, so basically what I saw was this is interesting here. Now the way that I do this, let me pull this over. The way that I do this is, hold on. So this is when the week started. So basically I had to look to the left and figure out where the fair value gaps and everything was at. But when I actually looked at everything, this is the current dealer's range that price was in. Now, the way it works is, as far as the inefficiency on the fair value gap, it'll run to the higher one. So this has been proven on the weekly, which I've just seen for the first time, and is proven for the daily Glitch in the Matrix. So what tends to happen is that it will run outside of the highest dealer's range. I have to back test this other weeks as well. It's the first time I really did it for the week. This is the dealer's range here, the high and the low, the bigger one, and then we had a mini one as well. It even worked on the mini. On the mini, when price came out, it's going to run up to the highest inefficiency based on balanced price ranges and some of the COT data that I have. You see, this one is the lower one. This is the higher one. So it ran up there and then down there. But the whole point is, looking at this, I should have known that it would not break this low down here. Now, here's the confusing part. It works based off balanced price ranges and COT data inefficiencies, okay? So down here, not the 24, I'm experimenting with that, but down here, it seemed like it should have ran down here. I think if this was US oil, that's probably what it would have did. But I should have known that it would not come down here because these numbers, these inefficiencies were higher, okay? Here's the actual glitch in the matrix all the way up here. Let me actually, here's the glitch in the matrix all the way up here. But even though these numbers here, especially this one, is higher, I should have known that it would run up here because it's going to break out of the highest inefficiency. It's going to break out of the highest inefficiency dealer's range, and then it's going to take the glitch. This is the highest number above the range here based on the fair value gaps. Okay, the way that I do this. Now, so I should have known that it would not come down here, but I thought it probably would just based on the number. So I see now, but I still have to back test this, but next week I'll see where is the biggest dealer's range. And let me explain what I mean by dealer's range for people that's actually watching this. Let me take off my secret notes. Okay, so now if I bring the chart over, okay, remember here, this is the 15-minute chart. Look at the number. That's Friday, Sunday, right there. That's what a line is. So you have to ask yourself, well, what range is price inside of? Now, you could say it's inside of this range here, this low to this high, but that's true. But remember, this low was broken right here. This low was broken right here. So now we have a new dealer's range. So you have to look to the left and say, okay, well, what dealer's range are we inside of? Okay. What dealer's range are we actually inside of? And so you could say we were inside of this range here from this high to this low. I think this would be accurate, but the way I did it was from here to down here. Even when I actually looked at this high right here to this low, which I see now is probably the most accurate one, it still worked out where price would have went higher, okay? So let me pull this back over and finish out the glitch. Turn back on the annotation, Sunday, Friday. Okay, so let me turn back on the annotations. Okay, so all them Fibonacci's and stuff over there. Okay, so basically the glitch was here. So, so basically I didn't trade this live, but it was a win because I did identify it. I really thought it was coming down here, but I see now that I guess it does respect the dealer's ranges. Even on the weekly, I know it does it on a daily. It did it all last week, and I actually have to forward test this, back test this week as well. But I was kind of focused on oil this week. So this mini's dealer's range is very interesting. That it even respected, it went to the highest range first. So this is going to be really exciting to take a look at this week. I'm looking at now because I've been focused on oil this week, not US 30. I've just been taking a look at it. But it ran up here to the dealer's range, to the glitch in the matrix for the week. Okay, so going back, um, this is what I would have done if I would have known that price. Actually, man, this is good that I shot this video for myself. If I looked at the range and saw on Friday or Saturday, if I saw this, because I didn't trade this, I literally just marked it up just now. Okay. But if I would have saw this is what I would have done. If I said, okay, well, price is not going to come down here, even though I have higher numbers down here, price is not going to come down here. It's going to break out of this range up here first, based on the way this works. So what I would have done is this. I would have put a Fibonacci on here. Let me show you. Actually, let's go to a different chart. Let's go to a different chart. Let's go to a different chart real quick. Okay, so this is what I would have done. Okay. Let's go back to the week started. So what I would have done is, let's go ahead and put a line right here. This is how I mark it up. Friday, let's go ahead and put a line for the week. Okay, Friday, Sunday, boom, right there. So let me go ahead and put a blue line here. And I would have used Fibonacci if I could go back. I was focused on oil all this week. I can't really focus on multiple charts unless I have a team. So what I would have done is I would have been like, okay, well, we're going to put a Fibonacci on this bad boy. So if I saw the range, if I saw this low and this high, and I saw that it had to come up here, then I'm like, okay, well, it may just run up there. It may just run up there. Actually, this is the range that I actually looked at, but I think that was incorrect. Like I said before, because if you see this low and this high right here, this range was broken. So now it created another range. So I should have been using this high and this low instead of this high and this low, but it still turned out that it had to go higher based on the fair value gap. So what I would have done is put Fibonacci on here. And then I'm about to end the video. Let me use the Fibonacci. Let me use the magnets. Strong magnet. Okay, so what I would have done if going back, and this is good that I shot this, is that I would have put a fib on here. Okay, I normally would put it on the bodies, the way ICT teach it. And it's a strong magnet here. Jesus Christ. So what I would have done was I'm trying to put it on this wick up here. Okay. Because remember, I would have not known it would have done this here. So what I would have done is I would have put a Fibonacci on here. Let me just do it the way I would have actually done it in the video. I'll just wing it. So what I would have done is I would have put a Fibonacci on here. And if I seen, usually we don't have a retracement until we get to 23.6, if you understand how the structure works with Fibonacci. I've studied it very, very detailed. So what I would have done is, remember, I didn't see none of this over here. It just would have been all black right here. So what I would have done is I'm like, okay, well, price is not coming down here for sure. It has to come up here first or come out of here first. The glitch is out. Glitch would have been all the way up there, remember, on another chart. So what I would have done is I would have been like, okay, well, it's either going to retrace and break out right here. Like when price was dropping, I'm probably be honest, I would have bought right here. I would have bought off the 23.6 and just probably expected price to go like that. When price dropped back down, I would have just been in drawdown right here and just had to eat that. You know, I probably most likely would not have over leveraged. And I would have told myself, I'm like, okay, well, the way this shit works. Actually, you know what? I should have put the fib on the other one. But I'm like, the way this shit works is it has to go past 50% to go up to negative 61.8. Okay. And I think that based on that other chart, the glitch was, I think the glitch was hit where? Yeah, the glitch was hit here on the other chart. It was hit like somewhere around here. It was a short fused glitch. So I would have known, I would have been like, okay, well, it probably has to come past 50% to go up to negative 61.8, which is where the glitch was on the other chart. So what I would have done is I probably would have bought here. I'm being honest. I would have bought right here and expect the price to just push up. Now, when I seen it push back down, I would have been pissed off. You know, but then that's letting me know if it's coming down to negative 61.8, then it really wants to take off even higher than negative 61.8. Because if it retraces past 50%, most likely it's going to go up here. If it goes real deep down, then it's going to go to -1. This is just something you need to back test. Okay, because if we look right here, it came up to negative 61.8 and basically reversed. You know, not really reversed, but retraced. So, but cool. So I'm about to end the video. This is Glitch in the Matrix. Thanks for watching.